Hello and welcome to the stock market analysis. Now, the analysis of the major indexes every day is extremely important because you know why? 75% of stocks, they follow the direction of the main indexes, mainly the S&P 500, the Dow and the Nasdaq. We have here the S&P 500 futures. The daily chart is looking good right now because it has a few days up. Yesterday we had a down day, but it looks like it's bottoming. But do we really know it's bottoming, or is this just an oversold bounce before it goes back lower? Now, we have a bearish cross that's about to happen, or maybe already happened. Yeah, quite near. And we have a bullish cross here. What happens after the bullish cross, where the 20 MA crossed above the 50 MA, market went up all the way. And here we have a bearish cross, and there was some sell-off here. So, will this be a repeat of the bearish cross here? Perhaps, maybe. Especially if this move up here does not sustain, then probably we might see it sell off again down to the 200 MA. It's very, very possible. If you take a measured move from here to here, that might prepare you for a sell-off. Yep, down to about the 200 MA. Now, doesn't mean that it will happen, but it's possible, and you might want to put it at the back of your mind. That is why every day we want to analyze the markets. It's very important. That's why trading, it is not easy to make money in the markets. If it's so, if it's easy to make money in the markets, everybody will be millionaires, billionaires. But in fact, trading in the market takes a lot of discipline, takes a lot of patience, mostly patience, because you want to analyze every day, but you don't want to be clicking your buy button every single day. Now, the reason why the market bounced up here is because there's a pocket of support here. There's also a pocket of small support here. It's very important for you to know support areas, because if you short the market, when it falls and the stock reaches the support area, it might bounce up just like this. So look at these pockets of support areas. So the next area, if it sells off, will be down to here. Maybe it bounces back up. And of course, a very strong support area would be here. And I don't think the market will drop below here, because that's where also the 200 MA might be meeting. Now, at this moment, am I confident that the market will rise and rise? Let me just go to the 2-hour chart. I will only be confident if something happens, which is the break of a downtrend line. I always like to see the stock market break above the downtrend line. Here we have a kind of triangle type of breakout in the 60-minute chart. And this will be a new gauge for me, because I like to use triangles as a gauge. When it broke out of this triangle, it told us that, hey, I want to be bullish. S&P is telling us, I want to be bullish. Instead, if it was bearish, it will break above the lower trend of the triangle. So it tells you, I want to be bullish. And right now it is, let's make higher lows, higher highs, higher highs. And hopefully this will be a higher low as well. That is the definition of an uptrend. And the apex of a triangle is most of the time a very good support area. So watch this apex. If the S&P stays above this apex, then most likely it's going to go up, sell off a bit, and then go up, sell off a bit. And if it is able to stay above this downtrend line, if it breaks out, then we will resume the nice move up here into May, where we might probably hit all-time highs again in the S&P 500. Now, on the other hand, if the support here does not hold, we might see another sell-off down to this area and eventually down to the 200 MA, which might be a very good area to buy stock cheaper from an investing point of view. Now let's take a look at the QQQs, which represent the Nasdaq. Now we have quite a lot of support here in the past. You can see how the Qs refuse to drop until here a large red candle that formed. Now because of the sell-off, oversold is going up, but this will be a new resistance area. And why it bounced up is because there was a support here. So all the way sell off until here, the support area, suddenly a small bodied doji happened. And from there we know the market is going up, at least for a few days. Now you can see that there's a lot of resistance here, and hence I can't even see a downtrend line here, which is something I don't really like. But it has gone above the 60-minute 20 MA and the 50 MA, and that's something good. If it continues to trade sideways and form a cup with handle pattern, then I know it's going to break out higher. Or on the other hand, if it goes down here and forms a double bottom pattern, then I know I can draw a downtrend line. Let's say like this. All right, and today it goes down, the next day it goes down, and then it breaks above this downtrend line as it forms a double bottom. Then I know this is a very possible trade that it might go up. Okay, so these are anticipation. You will learn how to anticipate moves. At the moment, I don't like the environment. It's best, right, not to trade. But if you anticipate and things start to happen, you can see that you're 2-3 steps ahead of other people if you anticipate. And if it really happens, then you're ready to pull the trigger. So a lot of this analysis and stuff is all in your head. Preparation, when opportunity comes, that is when a lot of traders and good technicians get it right and make money. Now, the DIA, which represents the Dow, why is it bouncing up? I'm sure you know, because it drops to an area of support, very strong support area here. I don't think that it's going to drop straight away. It might just drop again. If it drops, trade sideways a bit before going down, if it goes down. But this support is strong enough because there's a lot of sideways trading. And we can see the Dow is actually stronger than the S&P and the QQQs. Very nice bottoming pattern, kind of like triple bottom here, breaks above a downtrend line, move up. And of course, there are resistance around here. Let me just show you the resistance area. You always, as a trader, technical analyst needs to look at resistance area. Look at the amount of resistance here. That is why it cannot go up. But what might happen is, well, first scenario, it might form a double bottom, break a downtrend line, another downtrend line, you can redraw, and then break above and then move higher and even make new highs. Or the other thing I would really like to see is for it to form a cup with handle pattern in the 60-minute chart. When it breaks out, it will move higher here to around here and maybe even make new all-time highs. So that is what we anticipate and hope it will happen. If not, if it corrects to the rising 200 MA, it is very good as well because it's a very strong area of support, and possibly those who are investing can enter stocks at a cheaper price. Now let's just have a quick look at gold prices. Gold prices still in uptrend, although a bit weak here. It's trying to find support at the rising 20 MA. Just treat it as a sideways at this moment, right? But if it continues to drop below the 20 MA, then it might sell off to this area. Crude oil, well, I must say it's finding support at the 50 MA. And if it continues to trade sideways a bit, eventually the support will hold and it will rise again. Otherwise, it will drop to the 200 MA. And last of all, let's look at Bitcoin. Alright, Bitcoin is already have a bearish cross, but that doesn't mean it will fall. You just have to continue to look at this support area. Support area is very important. It's doing a sideways trading, if you will. Let me just draw the... Alright, what happens when you're in a sideways trading range? Well, we do analysis, but that doesn't mean you need to trade Bitcoin every single day. Maybe you want to wait for it to go up to here and then buy the breakout. You know, just like there's a nice consolidation here and then you buy the breakout. So always remember, analysis is very, very important, but that doesn't mean you need to trade every single day. You reserve your energy for the best possible time. So I hope this helps, and I'll see you in the next one.